Good morning, everyone, and welcome to our OakBridge Weekly Market Update. Today is October 24th, 2022, and today we're going to be talking just a little bit about home affordability and what's happening with the Fed and how that's impacting housing prices. And just really quickly, the Fed, as far as what they're doing and where things are going, has had a pretty dramatic impact already on the housing market, and it looks like that will continue to go. I'll talk about this chart in just a minute, but maybe as a backdrop, just mention that the 30-year mortgage right now rate has skyrocketed to a two-decade high of 6.94%. So you have higher borrowing costs right now of people trying to get into homes. You also have housing prices that have increased quite a bit. And so this has weighed pretty heavily on the housing markets right now. Right now, if you look at the slowdown in existing home sales that are happening right now, month over month, last month, it contracted 1.5%, and year over year for the last 12 months, it's contracted or pulled back 23.8%. So we've had a pretty significant pullback in housing starts and in the housing market and buying and selling of homes right now. And right now we've got anyway, just about half of the people that used to be buying homes are buying homes right now. And so the question always becomes, is this going to be something that's going to create a real housing market crisis, or is this something that's going to be able to be managed? And one of the things that we need to keep in mind with this is that existing single-family homes, current inventory is 1.536 million, and that's well below the average of 2.3 million for the average over the last 10 years that we've had. The other considerable thing with this right now with regards to housing prices is that one of the things that we look at is disposable income. How much of disposable income is going into housing, and how much of it is available to go into other consumer items or food or other types of investments that people have. And right now, that disposable income, the percent that is going down into housing is still only 3.9%. And in 2007, the peak was up to 7.2%. So almost half, a little more than half, as far as where we are right now with disposable income going into housing as what it was in 2007 before we saw the big correction in 2007, 2008. So if you look at this chart here, what this chart is saying is that, number one, home builders' confidence has gone down quite a bit, and housing starts is also coming down quite a bit. And one of the things that the Fed has been looking at as it's trying to raise interest rates is whether or not they can get inflation under control. And this is, from at least the housing standpoint, is a really good sign that from a housing standpoint, inflation is going to be able to be managed. So with that being just one piece of the puzzle, it is still a fairly significant piece right now, and something that is going to be looked at going forward. So anyway, there are some positive news in the market. Last week was the best week that we've had in the market since June. We've had a little bit of uptick. We've regained just a little bit of the losses that have occurred in the portfolios. So stay tuned. We'll keep you informed. And again, if you have any questions, please don't hesitate to reach out and give us a call. We're available and happy to meet with you anytime you'd like. Also, remember that if there's somebody you think might enjoy looking at this presentation, feel free to forward the link on, and we're happy that you're with us today. Thank you so much, and we will see you next week. Thank you again.